Thank you for tuning into the Equity Channel, where we provide the highest quality stock market analysis to individual investors. Today, we're going to be talking about telecom giant T-Mobile. This company just announced their very first dividend and a massive share buyback program. Before we get started, be sure that you subscribe and turn on your notifications, because every time we drop a new episode, money is made. T-Mobile is one of the world's largest telecom companies. They provide postpaid and prepaid wireless services. As of the second quarter of 2023, T-Mobile had approximately 105 million customers. In terms of market share, they hold approximately 27% of the wireless market. Trailing 12 months, T-Mobile has raked in over $78.6 billion in sales. One of their strengths is their broad 5G coverage, which became even stronger after they merged with Sprint back in 2020. Following the merger, T-Mobile's net worth went from just under $29 billion to over $65 billion, and in just a single year, their market cap grew by over 145%. Most recently, T-Mobile announced a $19 billion shareholder return program, including paying out their first ever dividend. $3.8 billion is set aside for the new dividend, $750 million to be delivered in the fourth quarter of 2023, and the other $3 billion to be delivered in 2024. T-Mobile has also projected the dividend will grow 10% per year over the next 5 years. After reporting a slight decline in earnings this year, T-Mobile is projected to return to growth in 2024. That is, unless the calls for recessions are correct. Earnings projections are slightly lower than they were 30 days ago, but well above where they were 90 days ago. Financially, T-Mobile is in great shape, with services revenue growth in the mid-single digits over the next forecast period. This growth more than offsets revenue decline from the sale of Sprint's wireline assets and declining wholesale revenue from the Dish network. They are also projected to see an improvement in free cash flow, driven by higher earnings and reduced capital spending. T-Mobile's medium-term plan is to add 7 million to 8 million additional fixed wireless subscribers by 2025. These medium-term goals are more than achievable, but the question is, does all of this translate to returns for investors? The global telecom services market is expected to expand at a compound annual growth rate of 6.2% from 2023 to 2030. While I would love to believe T-Mobile will grow at a pace 100 times that of the industry, which is what their current projections suggest, I thought it was best to dial it down to a safer bet, which puts them in line with the industry. With that in mind, I landed on a fair value of about $148.19 per share. But true value investors never buy at fair value. The key concerns should also be worked into the estimate, so I would be looking for a margin of safety between $117 and $107 per share. I have a pretty long list of concerns, including the fact that the current growth projections are far too high, and the company needs to add more working capital to their balance sheet, but nothing I think they can handle in the long run. In fact, I just think these concerns are a benefit to long-term investors looking to purchase T-Mobile stock at a lower price. Over the next 5 to 10 years, I see T-Mobile potentially becoming a $500 billion brand. The Equity Channel is one of the most followed stock market podcasts for beginners, a valuable resource for investors who are looking for information on the stock market and the economy. We love to make our episodes quick, straight to the point, and rich in value. We hope that's what you got today. Be sure that you subscribe, turn on your notifications, because every time we drop a new episode, money is made.